everyone, welcome to the Trading Battle sponsored by ACAP. I hope you're prepared for an exciting live session as we've got two great traders on our show today. We'll review their trades, dissect their strategies, and see how they make profits in real time. Of course, this is what our traders do every single day, so I'm sure we won't see them sweat too hard. In one corner, we have Kevin Davey, a World Cup of Futures Championship winner. He's developed and traded for over 25 years almost every futures market, from E-mini S&P to crude oil, cocoa, and corn. In the other corner, we have Gary Fickhart, who specializes in currencies. Like Kevin, Gary has more than 25 years of trading experience, and he looks like he's brought his boxing gloves. Over the next 45 minutes, you'll see firsthand how these experienced pros make money in a live market environment against all odds. Both of our traders are positional traders. They typically hold their positions for days, weeks, and even sometimes months. But the difference is that Kevin is pure algo, so it's man versus machine. Today, they are trading in front of data. They and put it in positions they normally won't want to be in, and forced to pick trades at a specific time of day instead of waiting for good setups to occur. So let's see how they perform when they're in the hot seat. There are three challenges in today's battle: the kickoff trades, the crypto trades, and the best trades for the week ahead. The stakes are high. Our traders not only trading for bragging rights and internet fame, but also charity of their choice. So enough from me. Let's get right to it. We have personal income from the US, personal spending, and Canadian GDP numbers coming in at about 13 minutes. Gary, do you care about the data, and what trades are you looking to put on?
Yeah, data just makes the markets move, so volatility is good. So yes, I care about the volatility, but not necessarily how the market's going to move, because it can all be based on technical analysis. So whether we trade corrections or trading the actual move, that'll depend on the actual setup.
Okay, sounds good. So what trades are you looking at?
Right now, you know what? You made it real tough today because we had a lot of movement out of the US. We had some strong movement. We were looking for that over the week for a dollar to actually weaken, and we're starting to get that out this morning. So the markets have moved early this morning, as well as on US oil. But I'm going to go to the pound JPY. And the reason why I'm doing the pound JPY right here is because we have had that extended move. And if I look at the way the markets move technically right here, I like to look at, and I've gone down as far as the 15-minute time frame just to look for these correction moves. And so if I look at the chart right here, what I'm looking for is how the market has been waving since the start of the rally. So if you go to the 1 hour time frame, you see this big sharp rally. But if you go down to the 15-minute time frame, you can actually see that we've had a swing from a low to high, and it's actually hit the 1.618 and gone further. So we've had a very strong move in the morning. This is how you know that the market's really moving strong. But now the market is going to correct, because what goes up must come down. All right. And that's the same for my credit card. My wife keeps saying, what goes up must come down, right? So the markets must correct itself. And if I look over here, we are at a top. You mentioned there's going to be news out there, so may get some volatility. I'm hoping that my analysis is correct right here, and that we are topping out, because I do see a backside of a trend line being supported as well as resistance. And so I'm going to look to sell for a short-term trade, 20 to 30 pips on this trade on the pound JPY. But what I am going to do is, Kathy, I'm going to go ahead and use a cost averaging approach. And the reason why I'm doing this, just so that there is room for me to have a bit of error. If there's room for error, I want to be able to have other positions to load in, because what is definitely due is correction. So without further ado, let me go ahead and execute this trade. And I'm gonna place stop losses above this level right here, because I want to keep it really out the way, but I do want to go ahead and capture. Now this is intraday scalping, so 1-to-1 risk reward ratios are probably not frowned upon. If this was more position trading, then 1-to-1 would be frowned upon. So I'm going to go ahead and do a very short-term trade, and again, shorting pound JPY. Let's go to the platform right here, and let me just grab that stop loss area again. It's 150. It looks like 37 right here. Let me see it. Sorry, 97, 150.97. So I want to place my stop loss above that. Let's go to the platform. I'm going to pull up pound JPY. I actually never
So
added this. Yes.
while Gary does this, it looks like Gary is trading, basically selling into trendline resistance, and using his fibs to kind of guide that. And like some of our other trading battles and some of our other pro traders, what he's doing is he's using some of the swing levels, the swing highs and lows, as relevant stops. So for those of you that are kind of new, swing highs, swing lows, we talk about them every single week, and I think that really shows how important they are in terms of trading. Now, Gary, you mentioned that you want to cost average into the position. Typically, how many times do you cost average in? Do you have something in your mind, or you just let it go and see?
Yeah, normally, look, when I get it at the top or bottom of a wing structure, a wave structure, then typically I'm expecting correction. So I do have a level where I start saying, hey, you know what, maybe I've got this one wrong, and you start cashing out or taking losses. But uh, typically, what I'll do is I would look at the average daily trading range, and I'll use that as 25% of the gaps that I want to go ahead and trade in, and then I could go up to 10 entry points. And I think this is a good disclaimer. All right, very important that I've got to make sure that whatever I'm doing, my worst case scenario, if the stop loss comes in play, that it's still a portion of my capital that I'm risking. It's not saying, hey, I'm not opening up my whole portfolio to risk, but I'm saying a portion of my portfolio I'm willing to take on risk because of what I'm expecting the market to do. And so that could be anything between 0.5% to 1% total risk on each position, sorry, on total positions rather than each position. So on this
Okay,
particular trade, because it's a
very
pound
good.
JPY, let's go ahead and do this. I'm going to go in. This is a $10,000 trading account, so I'm going to go ahead and start off. I've already done my calculations. I want to go ahead and risk on this a zero point 0.1 per 0.1 lot. So 0.1 lot right here would be a micro lot. See here, my eyes are a little bit messed up here. All right, so I'm going to go with micro lots here on the thing. And again, I'm going to enter multiple positions. I'm going to give it a label here, entry one, so I know where it's coming from. Stop loss, I'll go ahead and place. I know where I want to put my stop loss. I can put it in now at 150. And we said 97. I'm going to keep it at 97 right at the high, but I'm going to actually, I want to change it right now. I'm going to take it 10 pips above that. So it's going to be 51.07 right here is going to be stop. I'm going to manually close the position, but if I leave it, I'll put a limit in. So I'm going to go ahead and sell at that point right here. Oh, hold on a second. My bad. Did I just? Yep, I got it in there. Now I'm looking over here and notice that I got my stop in there. There's a stop right above the high. I've entered there. And so what I'd like to do here, Kathy, is I'd like to go ahead and look to enter above these levels as well. And I'm saving some of my margin for some crypto trades as well. So that's why I'm going in with only zero point 0.1 lot sizes. Now, what
Okay,
I want
so
to go.
let's go ahead and monitor this, and let's give Kevin an opportunity to place some of our kickoff trades as well. If you want to add positions later on, just holler and let me know if you want to add your next orders in. So, Kevin, what do you see as the best trades that you want to start the session with?
Okay. I'm looking at the Euro US dollar. And the reason I'm looking at that is I actually have multiple algos for the Euro US dollar. And right now, two of the three are actually short, which if you look at the long-term chart, I mean, this is a 4-hour chart, but you can see it's been in a pretty good downtrend. And just recently, the last bar or so has gone up, and so I have some algos that are just pure trend following. And I don't know if you can see it, but I put a little arrow where one of the algos entered short, right where my pointer is. So it was kind of a breakout. That was where one of the algos entered. One of them went short a little bit later. The other algo that I have is actually just flat. And that happens a lot, where sometimes you will get algos that either don't take signals, or they compete with each other and cancel each other out. But since I have two that are already short and the other one's flat, I'm just going to go ahead and sum them up. And, so the sum would be -2 basically. And I'm going to sell the euro into this report. And then if I get a signal the opposite after, as a reaction to the report, which then I may just manually exit. So that's what I'm going to look at. So I'll just enter a sell order right now, and there I'm in. So now I'm kind of in line with what my algos as an aggregate say. And you'll notice the one thing compared to what Gary's doing with what I'm doing is I don't really analyze the market as far as levels and that type of thing, because I'm letting the algos do all that in the background. So I only get the output. It's either long or short or flat. And then I just kind of sum them up to figure out my overall position.
So where would you put your stops and limits?
So on these kind of trades, there will be no limit. I'll just keep going. So for instance, where the one algo entered, it's been short this whole time. And so even though there's been some significant pullbacks, it's a longer term trend follower. So it's been short since this is actually like back to June. So the one algo I have is a really long term. So for this trade, probably where there'll actually be an algo that will kick in long will be about 1.1617. So a little bit above the current bar there. So I won't put that in as an actual stop order, but what I'm doing is on another screen, I'm watching the algos. And if that gets hit, then I'm just going to manually exit that trade.
Okay, so it sounds like in reality, your algos will automatically enter and exit based upon the signal change. And that was what you would use as your stops and targets. And that's the reason why you're not putting on a stop and target now. But we are looking at, 116.17 as a possible exit point if the trade goes against us. And if it goes in your favor, you're just going to wait and see how much juice you can milk out of it.
Right, right.
I have a lot of questions about your algo, which I'll ask you now, but I'll cut you short because we've got data coming up. How many algos do you have running per instrument at a time?
It depends. Some markets I only have like one or two. Some markets zero. Some up to about like 4 or 5. So it really depends on the market. Some markets are just easier to create algos for. So with the euro, I actually have like 3 that I run. So yeah, it's really a function of what I've been able to develop.
And how many instruments do you follow? I mean, how many?
I'm trading mainly futures in the U.S., so I look at up to 40 markets, and I probably have algos for right now, probably about 20 to 25 of them. And, it varies because every month I turn some off, turn some on. And so it's kind of a fluid situation.
That I want to hear more about in terms of what kind of motivates you to turn them on, turn them off. But I think we're about 20 seconds to data. So we'll wait for it to kick off. Right now, we've got a short pound yen trade for Gary. We've got a short euro dollar trade for Kevin. Pound yen is down a little bit, and euro dollar hasn't done anything because he just put the position on. So we're going to put the scoreboard up, and we're going to take a look at this quickly. Let's see. We've got pound yen up. Pound yen seems to be okay. Pound yen seems to be down. Oh, it should be up. I was surprised because pound yen is actually moving lower. So core PCE numbers were better than expected. I mean, the markets are selling off a little bit. Canadian GDP numbers were better than expected. It seems like overall, all the numbers are slightly better than expected. But, the trades are, first of all, pound yen's going in Gary's direction. Pound yen, if you pull up the scoreboard, is probably about 15 pips in his favor right now. Euro dollar is moving up a little bit. So I guess Kevin will just hang on to that. And, Gary, if you want to exit the trade or take profits, let me know later. But Kevin, you said that there are periods in which you turn on and turn off your algos, which is really the the method to the madness, the secret, right? And so, what determines whether because in my experience, and I'm sure you feel differently because you're a pure, machine trader, but algos can't work 100% of the time in my experience. There's sometimes it works better, sometimes not so much. So, what is your catalyst for turning on and off a robot?
So the one thing I don't do is try to interfere uh, because of like events and that kind of thing. So I don't turn them on and off for that. But what I do is usually every month, and so today would be the day, I look at the performance of all the algos over the last month. And ones that have not been performing well that I have live, I would probably turn off. And then ones that have been performing well that maybe they were turned off from a previous month, I'll look to turn those back on. So what I'm doing in effect is I'm looking at the whole universe of algos that I have, and I'm turning on the ones that are currently performing pretty well. So it's kind of a market thing where if they're friendly to the market, then these algos will get turned on. But I only do this once a month because otherwise you run into uh, the kind of situation where you're like, oh man, the last trade lost, so I'm going to turn it off for this trade, and that just leads to all kinds of issues that I've found. So I found out the hard way, unfortunately. So what I end up doing is just do this once a month, kind of just a review of all of them.
So, is there a certain period of time that you do it once a month? Like do you just pick a specific day, or do you wait for it to perform so poorly that you say, I have to review the strategy?
Well, so usually what I do is I do that at the beginning of every month,
Okay.
and look at all of them. Now, you did bring up a good point about, hey, what if one goes bad during the month? What do I do? A lot of the algos, not all of them, but a lot of the algos that I have, what I do is I put something in place in the actual strategy that just will make itself turn off. So it's kind of a sort of fail safe. It's almost like a stop loss on the system. So, for example, if the algo has lost X dollars per contract or per lot over the past 30 days or 20 days, it varies, then it will actually just turn itself off for a little bit. So
Now,
between that helps out a lot, I found.
okay, so I have to ask you, and Gary, we'll come back to your pound yen trade that's doing very well in a minute. I saw a recent interview with that you did with Etienne, who's a very good friend of the show. And correct me if I'm wrong. You told him that you have 95 live trading strategies on at one time. How do you even follow that many? And are there certain ones that you overweight or underweight?
Well, so the 95 was at the time I did that interview. So since then, I've scaled back a little bit because the whole idea behind doing a bunch of algos is you kind of get diversification. So that's why I do so many. The actual monitoring of it isn't that hard. It sounds hard, when you say like 95 or 50 even, but the way I do it, um, I have it set up, and I just need to look at them every once in a while, and I have some alerts to make sure that positions are all synced up and everything. So it's really not as difficult as it sounds. What's more difficult probably is coming up with the algos in the first place. That's the real trick. But once they're live and once you have it going, to go from like 2 algos to 10 algos to 50 or even 100, it doesn't take a ton of time. But part of that is probably because a lot of the algos I trade are not intraday kind of in out, within a couple minutes. If they were like that, might be a different story.
Got it. All right, Gary, your pound yen trade is rocking and rolling. I'm assuming there's no cost averaging needed for this quite yet. Um, I think we may have lost your audio.
Oh, sorry.
There you go.
There we go. All right. So yes, this is actually a little sad because we haven't got cost averaging because the money's in the cost averaging. Getting in the first entry point is just to get a piece of the move. But when the cost averaging really starts building up, that's really great. But in this instance, we did catch it at the top. It was an expected retracement move that was going to happen, but it's not going to last for too long. It's just going to be a little correction move, and then it's going to start taking off again. If I look at the way the system is set up right here, or at least the charts, then this is that bounce that we're looking over here. But again, going down to the 15-minute time frame, I have to believe that the market's still waving up, and this is just a retracement. And I've already marked off some levels that I'm expecting price to push. I've got this trend line test here. It's at the 2-3, so there is a little test right here. But again, if I can get just down to around about 150.28, which is about another 8 or 10 pips from here, I'll probably be looking to cash out unless I get something really big going down. So, but it looks good.
All
But I
right.
do have some other trades that I'd like to look at as well, if we can, and explain why.
Right. And hopefully you can give us a crypto one while you're doing that as well, because we're going to look at our second challenge. You're
Okay.
free to put on other trades that look good because I'm sure our viewers want to follow along. But let's also talk a little bit about crypto and start to think about the trades that we want to hold on for at least 10 minutes for challenge number two.
All right. Well, I'm actually at the point right now. I'm going to look to close this position here on the pound JPY. We're up. Let's take a look right here. We got in at 71, I believe it is. Oh, sorry, 57 was the price we entered. We had 32. So we're at 25 per profit on that. And I'm going to cash out just because this is a counter trade. Counter trades are really tough. It was a quick scalp. So I'm going to go ahead and close that position out and bank that profit. And then we're going to go ahead and look at something now on cryptos. So let's do that. Let's jump into cryptos.
So I haven't checked the latest quote, but when we kicked off the session, we kicked off the trading battle, Bitcoin was really soaring. It was up 10%. Looks like that's still the case from your price charts.
Yes.
So we'll see whether Gary fades the move or follows it.
All right. So let's take a look and see. Let me just go ahead and correct this right here. Just give me 1 second here. Sometimes this does give us a little. All right, so yeah, we can see that the market cap is up. Bitcoin's up, market cap will be up. We're up 10.2%. So what I do is when I look for a good crypto to trade, I go to the CoinGecko list of currencies, and I actually want to pay attention to the top 20. But what's important to me is like today we're looking at more like an intraday trade, so I'll look at the last 24 hours. But often I look at the last 7 days, and I look at how the markets are set up in the last 7 days. And what I'm looking for is like Cardano. Cardano's down 3.9% for the last 7 days, but it's up 6.5% for the day, which means that the markets are really rallied. That means the only way I'll be able to get in on this is on the pullbacks. Now, we spoke about the cost averaging approach. This is where it's great because now, if the markets are really rallied and we're expecting pullback, what we can do is we can start cost averaging so that if we have these dips, we can get in on the dips and then allow the market to move further. So what I'm going to look for right here is I'm going to look for the least moving pair for the day, and hopefully we'll be able to catch some move on this. Let me take a look at. I love Polkadot, Solana. I love that. I actually traded this at the beginning of the week on Tuesday. We got in at Polkadot, Solana, Avalanche is also great. Uniswap is also good, but you can see they've all really moved quite a bit right now. 8% so far in the last 24 hours. So this is a really challenging entry, but I'm going to go ahead and find something. Let's see here. Okay, so let's take. Who loves Dogecoin? Okay, everyone loves Musk, right? All
Yep,
right, so
Elon Musk.
now we've got the CEO from XRP stating that we could see XRP actually go to $10. They've been screaming that for a long time. I don't know, but let's go take a look and see what we've got here with XRP. So I'm going to go to let's go to the chart, and I'm going to go to XRP right here. Um, Oopsie, my bad. And I'm going to look for, there's a pullback that I'm looking for right here. So that's, as long as we're getting pullback, we can trade that. Now, what I do is, Kathy, I am scalper, swing trader, position trader. I do all of that. But the one thing that I always look at doing, anytime I look for a trade opportunities, I always look to see where the market's trading with inside cycles. So just like Elliott wave, I've got my own sort of wave structure that I look at, very similar to the same concept as Elliott wave. And so what I look for is I look for wave structure, and this goes for cryptos, forex, stocks. It doesn't really matter. And so what I noticed right here is that we did have a price breakout, and so I look at this and say, okay, this is the lowest point that we had before the market started moving off these lows right here. So I look for the 1.618 as the target to the upside. So I'm potentially looking for XOP to rally up to around about, it looks like 116 right here. Here's a target, 116. So I'm going to put this in there. 116 should be the target to the upside. Now, what I'm looking for right here is, if I buy in on this, where am I going to get in at? Well, here's a good level right here as price comes back to retest that. But what I also do is I look at these internal swings, and I can see that there's been range bound trading right here. In fact, a lot. If you take a look right here, here was bottoms, and here we had some tops. So if price comes back to retest this level, this is a good bounce to the upside. And what I can do is I can look for the range distance, which is about, it's going to give me about, let's look here, 94.58. So 94.58 going up here would get me up to about this level right here. Okay, around about there. So just before the 1.24, the 114 is where we can expect price to go to. So I want to mark that off right here. So this is where I'm expecting price to fulfill this range breakout. But first I'm going to get a pullback. Now this is where the cost averaging comes in, right? Because now if I look over here on the 50-minute chart, I'm even though right now is not the perfect entry point, but that's where cost averaging really helps, because if price is going to take off from here, then at least I can get something in there if it doesn't come down to this point right here. So right now, where price is trading right now, I want to start buying in on XOP. So I'm going to go to the chart, and I'm going to go ahead and look for XRP here. And I'm not sure if I entered that, but let me see if let me see. I don't think I added XOP in on my my list of symbols, but let me see if I've got it here. So crypto XOP, and it
So
should be on.
while you're laying your trade on, I want to give Kevin an opportunity to walk through his process, because I mean Gary was very clear. He uses his Gary waves, and he basically measures those as a reference for the potential targets. And I think everyone can see very clearly in the chart his methodology, which is really wonderful. And crypto is really the perfect instrument for dollar cost averaging, because they go all over the place. So Kevin, and we'll come back and we'll look at his levels in a second. But Kevin, how would you trade crypto?
Okay. So I have actually two algos for Bitcoin. The problem with uh, any of the cryptos for me personally building algos is I usually like to build algos with a lot of data, meaning 10 to 15 years of data. That gives me the confidence to see how a particular algo's historically performed. And obviously with crypto, you don't really have that data. And even some of the old data that you have is kind of suspect, because there were very few participants in the markets at the time. That being said, I have two Bitcoin algos right now. One is flat, and the other one just went long earlier today, actually, when it broke out. And you can see by where the red line is approximately where I would have taken that algo would have taken that breakout trade. So right now, I have one algo that's long, one algo that's kind of just sitting, with its hands folded, twiddling its thumbs. But what I would do at this point is just sync up with that algo and go long. So that's what I'm going to do. And I just did that. So uh, what this particular algo is doing is just a pretty standard breakout type algo. And what it would be looking for as far as like a stop goes, it would be somewhere in this consolidation, or it's kind of an uptrend, but it kind of took a pause here around 44,750 or somewhere around there, and that's where it would look. So that's a pretty big stop relative to where it's moved right now. But for a 10-minute trade, uh, I don't think that'll be hit. Whether or not it continues on in the next 10 minutes, that remains to be seen. But again, uh, compare me to what Gary's doing, where Gary's doing more analysis of the market. I'm not doing that with these algos. I'm letting them do the analysis, and a lot of times I don't even know what that analysis is. And sometimes that's what makes algo trading so hard, because you will actually look at a market and say, hey, I think I should be going long here. And that's like your bias. But the algo will actually say, no, go short. And that was probably the biggest problem I used to have with algos, is I'd be looking at it and say, oh, it's got to go long here. And it would do the opposite. And a lot of times the algo turned out to be right, and it was my thinking that was wrong. But psychologically, it really kind of messes with you, because you think, hey, it should do one thing, and yet the algos do something else. So, and like I said, one of my algos in Bitcoin is actually just on the sidelines. And what I try to do is make all the algos different. You don't want all breakouts, because if you did, you'd have both of them going long, today. So you try to have algos that do different things, and you try to get some diversification and lack of correlation, because it is the same market, and you can even get diversification just by having different types of algos. So that's kind of what I aim for.
So, having traded these algos for so long, and what I assume is that you've learned to trust them, is that why you have so much more of a relaxed approach to trading? And you seemed like a much more relaxed chap than Gary and I.
You know, it's just something that's come with trading for probably, I think I've been trading for over 30 years, and the last 10 or 12 or so has been full-time trading. It used to drive me nuts, all the ups and downs, and watching, the profit. Like, I'm looking right now at the screen, and my Euro position's down and my Bitcoin position's down. And yeah, definitely was a time where that would freak me out, where I'd be like, oh man, uh, I'm losing money on both these. I need to take some action. But over time, I've realized that if you've spent the time to properly back test an algo, and to, run all the statistics on it, and you say, hey, this works, it's been proven to work, you can't just start overriding it, because then basically what you've done is you've thrown away all the analysis you've done, all the back testing you've done, and you've said, yeah, the back testing says one thing, but I know better. And that, to me, when there was a time where I still did that a little bit, that is what caused the stress and caused anxiety. But creating algos, having the confidence that they're just going to work, not always in the time frame you think, but in the long run, then that kind of makes you calmer. That's really what I've found.
Okay, we're going to get back to trading just one second, but I have to ask you. You're the winner. You've been the winner of the World Cup Futures Trading Championship. What were you trading? How many algos were you trading? What kind of instruments were you in? How did you make that happen?
Okay, so when I did that, what I did was I created one algo. It was a trend following algo, and I traded it on 8 different markets, and each market was unique as far as having different set of parameters. And so what I tried to do was actually had a basket. So I had things like probably like wheat, and I know I had copper because copper ended up the year I won. It caught a nice trend in copper. And so a lot of my profits were due to basically one or two trades. And trading a contest is a whole lot different than trading in your normal accounts, because you're kind of going for the maximum return. And hey, whatever the risk is, if I blow out the account, that's kind of fine. So the big lesson I learned in trading a contest is you have to have goals up front, and you have to have, you have to say, I'm aiming for 100% return in a year. And that, in the case of the contest, that's what I was doing. I said, if I can get 100% in a year, I probably will finish in the top 3. And as it turned out, I did better than that and finished in first. But I didn't have risk on the downside. I was basically saying, hey, if I blow out that account, that's a chance I take. So it's not really, that trading isn't necessarily something you'd want to do every day in your account. But as long as you have goals, you say, I want this kind of return, I'm willing to accept this kind of drawdown, then you can build algos around that. And that, to me, is the real key, contest or not.
It's a very honest answer. Okay, Gary, let's get back to trading. You want to share with us your stops and limits for crypto, and then tell us what your favorite trade is to leave with us for the week.
Okay, so what I did is I actually got another crypto right here, the which is something I'm sure everyone's interested in, and that's ADA. ADA is also a good crypto right here to get involved. Let me just take a look over here. Cardano hasn't moved much in the day. You can see right here we're actually down 3.9% over the last week, but we've 6.5% up for the day. So I want to go ahead before I jump into that final trade for the week. This one right here, and again, these type of trades may be great for keeping it over the weekend, because we do have cryptos moving really good over the weekend. So come Monday, Tuesday, this might be a much more attractive setup. So I'm going to go ahead and look to trade this too. But if I can, Kathy, I want to look at this from more of a technical basis as well. So I'm looking at this again. I look at the wave structure, and so what I'm looking at on this is I'm looking at from the low point right here, we had a rally, but then the market tested it. So we had a bottom right here. But then since then, the market created this wave 1, and then there's wave 3 up here. So we're looking for a correction move, and the market tends to come back to retest the 1.618 right here once it blows out of it, which it did. It had a really strong rally. It's going to come back to retest. So I want to start cost averaging in this area. Now, you talk about stop losses. Now, there's two ways to trade it, right? When you're trading on a platform like through ACAP, and you've got margin that you're trading on, then yes, stop losses are important. But to be honest with you, crypto, I do it on my Coinbase account, and I've got capital that I'm investing in. And when I go ahead and I keep buying crypto at, let's say, at certain levels, I'm only going to lose on that crypto if the thing wipes out. If crypto goes to zero, or that crypto that I'm trading goes to zero, that's the only time I'm losing money. So I'm not trading on margin, but I'm actually trading with real capital. So when it comes to these type of trading, then what I do is I'm always going to put my stop loss as far as I possibly can on cryptos, because I know how volatile cryptos can be. And so if I was to place a trade on this one, which I'm going to do right now, my stop losses would be below this level of resistance right here. So well below that, because I know that the market's going to come back to retest this, and I'm expecting to bounce off there. But if it does go down further, I'm going to re-enter down here again, because this is where the turn point could be. And this is awesome, because these levels, if the market does come here, I'm maximizing my profit to the upside. So the deeper the market can move, especially when we have this big rally that we're seeing right here, the deeper the market moves, the more profits we can make to the upside. But if the market doesn't move and does not correct itself and turns around, we're going to make profit, but we're not going to make as much profit. So I welcome corrections, but I'm always going to try and enter in just before, so that we can make some money before the market turns in. Like I said, Cardano is actually something that a lot of people should be interested in. We haven't got any of the smart contracts being released yet, but they are going, and that's going to boost this crypto. So let me jump into a trade here, and I'll put my stop losses on that. I've got my Ripple in already. This is Cardano right here. So I'm going to start entering on this trade, and I'm going to go in at market right now. So I'm going to trade at market. And some might say, well, big dog, this is like, really far away. And the truth is that it is far away, but still we can go. And I'm going to get a little bit more aggressive on this. So I'm going to go with 200 right here. New quote. Oh, okay. What's a new quote? Oh, 07. Okay, I'll accept that. All right, let's go ahead and do this again. 200. Yep. All right, we got it. Let me see my margin on that. Margin is, yep, a small margin on that. Okay, that gives me enough to re-enter. Now, what I'm going to do is I'm going to space it out, and I'm going to re-enter on this a little further down here. And I'm going to enter at round about, looks like 2. So I'm going to go with right about here. And I'm going to buy in. And that price is at 2.783. Yep.
So this is a limit order, right?
This is going to be a limit order, yes. So I'm going to limit
Okay,
order
great.
and I'm going to go ahead and put that at 2.1783. Let's go 84 on that. So I'll go ahead and place it in over here. And I can call it entry 2 if I want to go ahead and just label it. And then I'm going to re-enter once again on this a little lower right here. And like I said, this is a great trade for the weekend because we're going to get correction and then we're going to get this big boost in the weekend. So if this is a weekend trade for me, then this is it. This is it. This is the one.
Yeah, I like it a lot too. I think I think you're very clear on your levels. I think that Gary has made it very he's outlined it very well that fibs are his thing, and hip fibs and Gary waves. And so I think it's pretty easy to follow along. So we've got Gary who's closed his pound yen for profits. We also have you in XRP and now in Cardano. I know that for the today's battle you are ahead, but as I know, as our viewers know, things can shift quite dramatically as the week progresses. So, we will see. Now, Kevin, what is your favorite trade for the week ahead?
Okay, so I'm looking at gold, and I actually have 3 algos that run on gold, and right now all of them have turned short. So even with some of the recent trade action yesterday where everything was up, it's still looking down. So I'm going to actually go short, basically because all 3 of the algos together say go short. And so what I expect if this works out, so I just entered right there. Maybe over the weekend, what you'll see, come Monday morning, is you'll see gold back in this area. Who knows? But the point is, as far as like a best trade, what I like to do, and what the algos actually just do themselves, if they all line up, they're all going the same way, that becomes the best trade, where you end up putting the biggest size on just because all the algos agree. And so this is one of those cases.
Actually, my producers are telling me that, given the volatility in Bitcoin and how much it moves, you are both actually neck to neck right now as we look to close out our trading battle. So Kevin's going short gold, and he's also in Bitcoin along with Eurodollar, which really hasn't moved at all. It's basically moved 2 pips in the entire 45 minutes that we've been talking. So
Yeah, and I actually got out of that, so I did exit that position.
it's probably a wise thing to do simply because it just hasn't moved at all, which is surprising
Yep.
for a pair like Euro. Okay. I could spend hours talking to both of you. It's been such a great trading battle, but I do want to give you both the opportunity to talk a little bit about how our viewers can get more information from you, because there's a lot of good stuff here. I'm sure many people are interested in learning how to build an algo, in the ways that you've done, Kevin, and also, learning about those Gary waves, which I'm, now branding this as Gary waves, and fibs, from you, Gary. So why don't you go ahead and kick off, Gary?
Yeah, sure. So I actually traders can get hold of me through social media. In fact, I've got a name called FX Big Dog. If you type up FX Big Dog on Google, you'll find me. I do YouTube videos. In fact, I broadcast on YouTube daily. And we're actually started a new show called the Pip Grabber Trading Show, and it's actually to grab 20 pips out of the market. What we do is we follow a strategy that's actually showing results, pretty great results right now. We're up about over 13,000 pips for the year, and it's actually given us a 70, I believe, a 75% growth so far for the year as well. So it's a great strategy. We do it inside the show. It's called Pip Grabber. But the YouTube channel to look for is going to be FX Big Dog. Just search FX Big Dog, and you'll find me. Subscribe to the channel, and we do live shows. And through that as well, we share a lot of education about trading, about whether the markets are bullish, bearish, what wave structure we're in, what to look for, what to not look for. We actually talk about news, Kathy. You'll be impressed about that too. So we look at news as well. Yeah.
Good stuff. What about you, Kevin? How can our viewers get in touch with you?
Sure. So let's say you look at some of Gary's stuff and you like those Gary waves and you want to program them, make algos out of them. I probably can't help you with the actual programming of it because it sounds like pretty neat stuff. But what I do help people out with is actually the proper process to build an algo once you know what you're going to do. And people can reach me at my website, kjtradingsystems.com. There's contact info for me there. You could also search for me on YouTube. So there's a lot of different ways to reach me. I try to produce a couple videos a month on YouTube. You can also reach me on Twitter. I'm KJ Trading. And also at my website, there's a lot of info, a lot of research that I've done on, what stops do you use, what kind of exits should you use, and a lot of free articles and things like that. So if you go to my website, kjtradingsystems.com, that's probably a great place to start.
That was a great session, guys. Thank you so much, Kevin, Gary, for joining us. I know I learned a lot. I know that our viewers who are watching probably learned a lot. I love it when our battlers are very clear on what they do, because that's really the main takeaway from sessions like these, which is to learn how the pros do it every single day. Now, for our viewers at home, thank you so much for joining us. This is another high stakes, high intensity trading battle sponsored by ACAP. I look forward to seeing you at the next one.